and welcome. Joining us for the first time. Thanks very much indeed for joining us this morning. Now, we saw a trading update. Now, you focus on the IT side of the economy, and we saw a trading update coming from Business Connection. EPS expected to be 80 to 90%. You are not seeing much revenue growth, but you are seeing a lot of benefit from actions that they took in the past 2 years.
Yes, Godfrey, that's correct. The preceding 24 months, you've seen a lot of revitalization costs coming through the income statement. And this is the first time you're seeing the absence of that. And you're getting that natural earnings kicker coming through from that. And then there's also an outlook for maybe margins improving as a result of that revitalization exercise.
Right. But now, why are they struggling to get revenue through the books, given the fact that we know that the IT spend cycle comes before you see the general economic recovery?
Well, BCX is a player in the SA, mostly outsourced, not outsourced IT as much, but data centers and that kind of market. In South Africa, in my view, I think the market has been quite tough over the past 6 months. Specifically in that market, you're seeing more and more players entering it, the likes of Telkom coming in, Vodacom going aggressively after that market. And then also with CCOM landing, you're getting a lot of international players also looking at that specific market.
So it will be tough to be able to maintain the kind of margin growth that you're forecasting, 8 to 6% perhaps?
Yes, in terms of that margin, it's always been difficult cutting the cost to that degree at BCX. Whilst we do expect some margin improvement, but I think 8% might be a bit steep considering all the market competition coming in.
Absolutely. Let's talk about the other big players in the IT spend sector in Africa, DataTech as well as DataTech. Now, last week we saw both of them making acquisitions. Interesting enough, you make the point that this is in emerging markets, but it's at opposite ends of the world, if you like, one in Asia, one in Latin America. But what we are seeing is that both companies seem to be gearing up for expansion going forward. Let's begin first of all with DataTech. You make the point that you think whatever outlook that is positive around this company has already been priced into the share.
Well, it's been priced quite steeply. You've seen a substantial re-rating in the share going up to around 10 Rand 60, I think, almost, and it's fell down a bit now, trading around 10 Rand. There's a lot of expectation priced into the share. At a management conference in January, you had management guiding margins going up from where they are currently to 7–8% over the next 5 years. And whilst it's not impossible, I think the market might be expecting that a bit too early. We're expecting to see some currency pressures coming in this half, and also with the market recovering, you're expecting services to lag. So Data being largely a services player, we expect to see some lag coming through in the recovery for them.
Yeah, and in terms of the pricing around Data, you think that's fully priced?
Pretty much fully priced at present. Well, I have a slight preference for DataTech specifically as a result of its exposure to hardware and to the markets that was most affected.
Let's talk briefly around the IT spend that you see. Now, you are forecasting that we are likely to see an improvement, particularly driven by the big players, you know, your Cisco, your IBM, and some of those guys, and HP as well. Now, briefly take us through your thoughts around IT spend going forward.
Well, what's happened you have to look a bit at what's happened in the cycle. When we had the cycle, with the start of the cycle coming down, you had hardware spend being most affected and also first affected. And services actually tracking quite well throughout all this. And coming out of recovery, we expect the hardware to be quite strong, and services to lag in that. So there's also quite a substantial changes coming through in the market that's actually affecting how IT spend tracks. You're seeing the advent of cloud computing, virtualization, software as a service, all being made possible by faster internet connections. as well as all these new devices, the light devices, the likes of the iPad, the iPhone, mobile computing really taking off.
So definitely there might be some more growth that should be coming through into those stocks, but we have to leave it here.